This is Stock Talk, a discussion of stocks in the news with the analysts of Zacks.com. According to published reports, the stock of AMR Corporation, parent of American Airlines, took a 32% plunge in trading on Monday afternoon of October the 3rd. That intraday move seems to have been triggered by rumors running through the market mill that the company is facing the threat of bankruptcy. Well, here to take a closer look at the stock now with us are Tracy Reineck and Bill Wilton. Tracy, things have been kind of rough for AMR for a while.
Yeah.
Latest analyst forecasts look for a fourth straight year of losses this year.
Right.
And more losses again next year.
Yes.
What's going on?
Well, it's hard to run an airline. They have high fuel costs. They do have a lot of older airplanes, and they've been having negotiations with their three biggest unions for going on 3 years now, which is partially, I think, behind some of these bankruptcy rumors as well, because a lot of their competitors have used bankruptcy to get out of union contracts. So, maybe that's being kind of pushed around out there as a way of, saying we want to be done with these union negotiations. I don't know, because, there's a lot of stuff that goes on there in negotiations. But, they're starting to do some things to turn it around. Right after the stock plunge, actually, they did announce that they were reducing capacity, which a lot of the analysts have been complaining about. They were running too many planes, basically. So they're doing that, and they're retiring 11 757s, which is a less efficient airplane, and they've ordered a whole bunch of new airplanes that will be more fuel efficient. So, it's a difficult environment for a lot of the airlines right now.
Bill, at the time of this conversation, stock of AMR trading right around just under $3 a share.
Yeah.
Kind of near the low end of the 52-week trading range. When did this overall downturn start in this stock?
Well, the most recent downturn has been going on for about a year. This is one of those things where, Tracy mentioned all the measures they're going through to cut costs and all these savings. That's not a very good sign for a company, and it's reflecting in the chart. They're not getting any of these market updrafts, and they're suffering just as bad as anybody else in the downdrafts. Here you can see a close-up on the last 3 months. The news that they might be filing for bankruptcy protection, triggered that huge plunge. But as far as the chart goes, that's not to say that there's not money to be made if you're going to go ahead and trade AMR. You just have to treat it more like an option. It very well could go into BK and you could lose everything. Or, they're going to see those 30, 40% swings in a very short period of time. You just have to be very careful with this.
Go ahead.
And also, I just wanted to say, the most recent thing, after that big plunge, they have bounced back nicely along with the overall market.
Right.
And a lot of momentum-based traders might be trying to catch that upswing. You can see that there's a buy signal that was actually recently triggered with the MACD indicator.
That's one of the things that makes this one kind of difficult to determine as far as trend is concerned. Tracy, management has denied these rumors all through the week here. But there's a kind of an interesting situation going on here on the balance sheet. You've got an unrestricted cash balance of $4.2 billion that they say they'll have at the as of the end of the third quarter. And just last week, early October, they launched a $726 million debt offering, backed by leases on their jets to raise new money, right? And they've got a significant amount of debt, $1.3 billion on the books, but kind of a convoluted situation here.
It is, but they have the cash to continue on, and these airlines have been doing this for, decades, basically. They know how to maneuver the money and things like that to keep going. So it's a matter of, what's going to happen with the global economy, because that's going to affect, business travel affects what happens with them, and, how they're able to work through these contracts that they are going to be negotiating, and then, seeing where it all plays out. I mean, they are expected to take the loss this year, as you said, but the loss is expected to be a little less next year. They're supposed to lose $352 this year, maybe about $1.94 next year. And then 2013, some of the analysts are actually predicting maybe a small profit of 5 or 6 cents. So it's a lot going to depend on what happens with the global economy, them cutting the capacity and getting these new airplanes into position, and then these negotiations with their unions.
All right, thanks a lot for the information. We'll be keeping an eye on this one for sure. With Tracy and Bill, I'm Terry Ruffalo.